You ever think about like where the next big shakeups in like industrial equipment are going to come from? Like you might be surprised.
Yeah.
It's a Chinese company that's mainly known for making forklift parts.
Right.
But they're making a really serious push into the North American electric heavy equipment market.
Wow.
So it really begs the question, like, could the future of sustainable construction and logistics be powered by like names we haven't even heard of yet?
Absolutely. That's a great point, and that's what we're diving into today.
Yeah.
We're looking at Greenland Technologies Holding Corporation.
GTEC.
GTEC. That's right. We've got a whole stack of research here.
Yeah.
And we're going to try to break down what makes this company tick.
Yeah.
We'll look at their existing business, their ambitious push into EVs.
Yeah.
Take a close look at their leadership and their financials. And really our goal here is to like cut through all the noise and give you the essential insights you need to understand GTEC's current position and where they might be going in this really rapidly changing industry.
All right. So to get started, GTEC has like two main sides to their business, right?
Yeah.
You've got the long-established Greenland machinery and then the newer HEVI Corp.
That's right.
Let's start by breaking those down.
Okay, so Greenland Machinery, this has been their foundation. It was established in 2006.
Okay.
And their core business is designing and manufacturing drivetrain systems, primarily for material handling vehicles.
Okay.
Think forklifts, things like that. For years, this has been their bread and butter, their primary revenue engine.
Yeah.
Just to give you an idea of the scale, in 2022 alone, they sold $90.8 million worth of transmission products. So this division provides a really stable base for the company.
That's a significant operation.
Yeah.
So then in 2022, they launch HEVI Corp.
Right.
With a very different goal.
Yep.
To design, build, and sell all-electric heavy equipment specifically for the U.S. market. Their aim is nothing less than to be a leading force in sustainable electric construction equipment here in the U.S.
It's a bold move.
Yeah, it is.
It really is.
Yeah.
And while Greenland Machinery has historically been, where the big money comes from, HEVI Corp is starting to gain some real traction. Total company revenue in fiscal year 2024 reached $83.94 million.
Okay.
So HEVI is already adding to that big picture in a meaningful way, even though it's still early days.
Yeah.
Which speaks to the potential growth they have there.
So let's dig a little deeper into their product lines.
Okay.
So Greenland Machinery focuses on those transmission systems and integrated powertrains for forklifts.
Yeah.
And they cover a pretty impressive range, like 1 to 15-ton capacity.
That's right.
They handle both automatic and mechanical shifts, and they cater to both electric and those traditional internal combustion engines.
It's a pretty wide range.
Yeah.
And what's interesting is we're seeing a real uptick in demand for their electric-powered transmission systems.
Makes sense.
Yeah, not surprising given the way the whole industry is moving towards electrification.
Uh-huh.
So they're well-positioned to capitalize on that, even within their traditional business.
And on the HEVI side, they've developed a pretty comprehensive initial lineup.
Yeah.
You've got the GEF series electric forklifts, ranging from like 1.8 to 3.5 ton models, covering those common warehouse and logistics needs. And then there's the GEL series electric wheeled front loaders.
Oh, those are cool.
Models like the GEL 1800 and the GEL 5000.
Right.
And some newer additions like the H55L and H65L, which seem to target different application sizes, maybe?
Right.
And then we can't forget the GEX series, their all-electric 8-ton wheeled excavator.
Yes, it's a big one.
Showing they're really entering that heavier construction equipment market.
Absolutely. They're not just dipping their toes in the water.
Yeah.
They're really going for it.
Yeah.
And that variety in their product line shows they're serious about offering those electric alternatives across all these different segments of the heavy equipment world.
So it sounds like they're thinking beyond just vehicles, too.
Yep.
GTEC has also created an integrated electric drivetrain system specifically for electric forklifts.
Yeah.
So this combines like the transmission, the driving axle, the motor, the battery into a single unit.
It's a really clever piece of engineering.
Yeah, it sounds like it.
And it's a strategic move, too.
Okay.
By offering this. They can simplify the production of lithium battery-powered electric forklifts for other manufacturers, for OEMs.
Yeah.
And by doing that, they can significantly reduce the development time and costs for their clients that are looking to enter the electric forklift market.
So they're not just making the vehicles, they're making it easier for other companies to make the vehicles.
Exactly. And this integrated approach gives them a really strong gross profit margin.
Oh, okay. Interesting.
Yeah. which is always a good sign.
And to support that EV push in North America, HEVI also offers a range of mobile DC battery chargers.
Right. They're thinking about the whole ecosystem.
They're thinking about the whole thing.
Yeah.
So when we consider their market position and overall scale, it's really two different stories playing out, isn't it?
It is.
You've got Greenland Machinery, which is a huge player in China.
Yeah.
By 2018, they had sold over 91,000 transmission sets to more than 100 forklift manufacturers in China.
Yeah.
And by 2021, they'd sold even more.
That's a dominant position.
That's huge.
Yeah.
And then you contrast that with HEVI Corp, which only entered the North American market in 2022.
Right. The new kid on the block.
Yeah, so very different pictures.
Totally.
And then their shift in late 2024 to a more aggressive dealer model to increase their market reach shows they really want to grow their presence here quickly.
Yeah. No, they're ambitious for sure.
Yeah.
They are.
So what's the core appeal of GTEC? What fundamental value are they bringing to their customers?
So for Greenland Machinery, it's about delivering innovative and high-quality drivetrain solutions for material handling equipment.
Okay.
But for HEVI, the focus is all about being the green choice.
Yeah.
Providing all-electric equipment that drastically cuts emissions. It's much quieter, 60% or greater reduction in noise, and it requires less maintenance compared to your traditional diesel-powered machines.
Yeah.
This aligns perfectly with the sustainability push that we're seeing.
And the benefits go beyond just being eco-friendly, right?
Oh, absolutely.
That there has to be an economic case here as well.
For sure. These electric vehicles can often provide comparable and in some cases even better performance. Think instant torque from electric motors, which can really boost productivity. And all of this leads to a lower total cost of ownership over the long run.
Yeah.
No fuel costs less maintenance.
And as we talked about earlier for those OEM clients, GTEC's integrated electric drivetrain helps those OEMs enter the electric forklift market.
Right.
Because it saves them time and money.
Exactly.
So to break it all down, what does GTEC actually do and how do they make money?
So essentially, Greenland Technologies operates in two key areas. You've got Greenland Machinery. They develop, manufacture, and sell those crucial drivetrain systems, mostly for forklifts, and they are a leading supplier in China. And then you have HEVI Corp. They design, manufacture, and sell all sorts of all-electric industrial vehicles, forklifts, loaders, excavators, all targeting end users in logistics, manufacturing, construction all over North America.
Yeah.
So they make money selling these products, the drivetrain systems to other equipment manufacturers, and the electric vehicles directly to the companies that are going to use them.
All right, so now we have a good grasp of the business itself.
Right.
Let's turn our attention to the people running the show.
Okay.
What can we learn about their management team and their track record?
So at the helm, you've got Raymond Z. Wang. He's been CEO of Zhongchai Holdings since 2019.
Okay.
He's got over 15 years of experience in management and corporate governance and a background in senior financial advisory roles. A big achievement under his leadership was taking GTEC public through a SPAC merger back in 2019.
Yeah.
That's no easy feat. It requires a certain understanding of the financial markets.
And it looks like there's been some positive momentum on the financial front recently.
There has.
Which often reflects on the management's capabilities.
It does. Fiscal year 2024 was a turnaround year for GTEC.
Okay.
They reported a net income of $15.15 million.
Wow.
Huge improvement from previous losses.
Yeah.
And they managed to slash operating expenses by a significant 28%.
So this led Zacks Equity Research to upgrade their rating to a strong buy in January of 2025.
That's right.
So that turnaround suggests that they can steer the company through tough times.
Yeah.
What else does the research say about how they respond to market challenges?
Well, throughout 2024, they navigated all sorts of market and economic headwinds impacting both their own operations and their customer base.
Yeah.
But ultimately achieved that return to profitability. Before that, like many businesses, they were hit by the COVID-19 pandemic.
Yeah.
Back in 2022, early 2023 lockdowns in China.
Yeah.
Supply chain issues.
Big issue.
All affecting their revenue streams.
Yeah.
But they bounced back to profitability and even enhanced their financial performance, which indicates that they put some effective strategies in place. To adapt and recover, they focused on streamlining costs and improving operational efficiency.
This suggests they can react and adjust to those unforeseen challenges.
It does. They're not just standing still when things get rough.
Right.
They're proactive.
Just for investors to feel confident, a company needs to be transparent.
Absolutely. Transparency is key.
How does GTEC do in terms of keeping shareholders in the loop?
Well, they seem to have made a real effort to communicate.
Okay.
Their investor relations website is a central hub. They've got news releases, including financial performance updates, annual and quarterly reports, investor presentations. They even have an event calendar for upcoming investor conferences.
Wow.
Details about earnings calls, all accessible, so investors can hear directly from management about their performance and their plans.
And CEO Raymond Wang has participated in investor conferences as well.
Yes.
Which is another opportunity for engagement.
Exactly.
So when we think about the integrity of a company, ethical conduct is super important.
It is.
Does the research offer any insight into GTEC's ethical practices?
Well, the research shows that they have a publicly available code of conduct.
Okay.
This document lays out the expected standards of behavior for everyone associated with the company.
Yeah.
Emphasizing things like following the law, maintaining high-quality standards, building trust with clients, and fostering a positive and respectful workplace.
And were there any ethical controversies?
Our current research didn't turn up any major ethical controversies
directly
involving GTEC's management. But there was a shareholder lawsuit related to a proposed spinoff, but that was eventually dismissed.
Okay.
So it seems like there weren't any grounds to proceed.
So when we think about the big questions about management, are they honest? Are they capable? Are they focused on shareholder value? What's our take?
Based on our analysis, the management team under Raymond Wang seems capable.
Okay.
The recent financial turnaround and their strategic moves into EVs show they know what they're doing.
Yeah.
They also seem committed to talking with shareholders.
Yeah.
Their focus on profitability and the CEO's past comments about potential undervaluation could point to a shareholder-oriented approach.
Okay.
But to really know for sure, we need to watch their capital allocation decisions and overall performance over a longer period.
Okay, so let's move into the financials.
Okay.
What do the numbers tell us about GTEC's current standing?
So as of mid-March 2025, GTEC's market cap was between $17.13 million and $31.68 million.
Okay.
Which puts them firmly in the microcap category.
And what does that mean for potential investors?
Well, microcaps typically have higher growth potential, but they can also be more volatile compared to larger companies.
And how about that profitability?
Right, the price-earnings ratio, or PE ratio, has been reported as negative or zero.
Okay.
This suggests they haven't had big positive earnings per share recently.
Okay.
But that net income they reported for fiscal year 2024 could change that.
Okay.
We might see the PE ratio become a more useful indicator in the future.
So revenue growth, obviously a key driver of success.
Absolutely.
What are the trends we're seeing for GTEC?
Interestingly, they had a revenue decrease of 7.1% in fiscal year 2024.
Okay.
Total revenue was $83.94 million.
And if we zoom in on the third quarter of 2024, revenue was down 13.8% year over year.
That's right.
So what's driving this decline?
It seems to be mainly due to lower sales in their traditional transmission products.
Okay.
However, they're banking on their expansion into EVs through HEVI to fuel future revenue growth.
Makes sense.
Yeah, it's a transitional period for them.
Yeah.
For sure.
So let's look at their ability to turn sales into profit.
Right. Profit margins.
What do we see there?
Their gross profit margin for fiscal year 2024 was a healthy 26.8%, meaning they're doing a good job controlling the cost of goods sold. Income from operations actually jumped by 17%.
Wow.
To $12.59 million.
And they achieved a net income of $15.15 million in 2024.
Yep, it's a big improvement from the net loss they had in 2023.
But the trailing 12-month net profit margin as of September 2024 was still negative.
Right, negative 13.64%.
So those earlier losses are still affecting the overall trailing performance.
They are, but it's moving in the right direction.
So debt levels are important for a company's stability?
They are.
What does GTEC's debt situation look like?
This is where we see some conflicting data.
Okay.
Some sources say they have a really low debt-to-equity ratio around 0.03.
Okay.
Meaning they're not relying heavily on debt. But other reports show a much higher ratio, like 0.48.
So that's a pretty big difference.
It is. We need to investigate further to get a clear picture of their debt and what it means for their financial health.
So free cash flow is another crucial metric.
It is.
How is GTEC doing there?
Well, they showed a big improvement in free cash flow in fiscal year 2024.
Okay.
Net cash from operating activities went from just $2.45 million the year before to a whopping $13.34 million.
That's a huge jump.
Yeah, and for the trailing 12 months ending September 2024, Free cash flow was $9.43 million.
So this positive trend means they're getting better at generating cash from their core business.
Exactly, which gives them more flexibility.
And finally, how is the market valuing GTEC compared to their assets?
Right, so we don't have a specific price-equity ratio, but their price-book value,
Okay.
which compares their market cap to their book value, has consistently been between 0.32 and 0.4.
And what does that tell us?
Well, a price-book value under 1 can sometimes suggest that a stock is undervalued.
Okay.
Compared to the value of its assets.
Yeah.
But of course, you need to consider other factors as well.
So to sum up, are they profitable?
It seems they've reached profitability recently.
Okay.
And their cash flow generation has really improved. Their current ratio also looks good.
Yeah.
Suggesting they have enough liquid assets.
Okay.
But that conflicting data on their debt-to-equity ratio needs to be addressed.
Yeah, for sure.
And for earnings volatility, well, their earnings history over the past few years has been up and down.
Yeah.
They are profitable now in FY 2024. But that's after a period of losses.
Okay.
So it's a dynamic situation.
It is. So let's move on to the second half of our deep dive and consider how the market's viewing GTEC right now.
All right. Market sentiment.
What's the feeling out there?
So we saw a big jump in GTEC stock price.
Okay.
In late March 2025.
And what caused that?
This upward movement was largely due to the announcement of their strong fiscal year 2024 results.
Okay.
Investors liked what they saw.
Yeah.
But it's interesting because the stock had actually hit 52-week lows earlier in March 2025.
So is that a sign that people were worried about them?
It could be.
Okay.
It could reflect broader market concerns or maybe just low expectations before that earnings report came out.
So this really shows how sensitive the market is to the company's performance.
It does. News and numbers can really move things.
What are analysts saying about GTEC's future?
Well, it seems like they're generally optimistic.
Okay.
The price targets we've seen range from $9.50 to $13.
Okay.
And those targets are significantly higher than the stock's current price.
So they think there's room for growth.
Yeah, on average, analysts are expecting substantial future growth.
And are there many investors betting against them?
Not really. Short interest in GTEC stocks seems pretty low.
Okay.
Reported at 0.16% and 1.21%.
And what does that tell us?
Well, a low short interest usually means investors aren't expecting the stock price to tank anytime soon.
So not much bearish sentiment.
Not really.
So let's talk ownership. Who owns GTEC?
Right. So institutional ownership is reported to be between 11.32% and 12.41%.
Okay.
But what's really interesting is the high level of insider ownership, around 47.18%.
So what does that mean?
That means a big chunk of the company's shares is held by the management team and other insiders. And high insider ownership can be seen as a good thing.
Oh, so?
Well, it aligns the interests of management with the long-term performance of the company.
Okay.
When insiders have a lot of skin in the game, they're more likely to make decisions that benefit the company's value over time.
But are there any downsides?
Well, it can also mean reduced influence for other shareholders.
Okay.
Or affect the stock's liquidity.
And what does the research say about the impact on their corporate governance?
Unfortunately, we don't have specific details on that.
Okay.
From the research we have.
All right, so let's do a SWOT analysis to understand their position.
Okay, good idea.
What are their strengths?
Okay, strengths number 1, their established leadership in the Chinese forklift transmission market.
Okay.
2, their growing presence in the U.S. electric heavy equipment market through AGVI. 3, innovative products like that integrated electric drivetrain.
Yeah.
4, their recent return to profitability.
Okay.
5, their seemingly low debt levels, at least according to some reports.
Right.
6, significant insider ownership.
Okay.
And finally, their patent portfolio, which can protect those innovations.
Okay, and weaknesses.
Weaknesses. Well, there's that revenue decline in fiscal year 2024.
Okay.
Their history of earnings volatility. HEVI is still a young brand.
Right.
Those inconsistencies in the debt-to-equity reports and their microcap status, which can mean more volatility and limited access to capital.
And opportunities.
Opportunities are huge.
Okay.
Both the global material handling market and the North American EV market are projected to grow significantly. The regulatory environment is becoming more and more supportive of EVs.
With incentives and mandates.
Exactly. Their partnership with Lonking.
That's a big one.
That's a big advantage. And as we mentioned earlier, the company might be undervalued right now.
Okay, and finally, threats.
Right. Well, they face intense competition.
Yeah.
From big players in both traditional and electric equipment.
Right.
EVs can be expensive, and tariffs on Chinese imports could be a problem. They also depend a lot on their China revenue.
Yeah.
And scaling a new brand like HEVI here in North America is tough.
It's a competitive market.
It is. And they're not immune to economic downturns, which could hurt demand.
So as we wrap up our deep dive on GTEC, what's our conclusion?
It's complicated. GTEC is a really interesting case. It could be a value opportunity. But they're both promising signs and areas for caution.
Okay.
Investors need to do their homework.
Yeah.
They've got a stable and profitable foundation with their Chinese business. But HEVI, while promising, is still risky.
Yeah.
That recent financial turnaround is good.
Yeah.
But we can't ignore that revenue dip in their traditional business.
Right.
And their earnings have been volatile in the past.
Yeah.
Potential undervaluation and analyst optimism are good signs. But there's still a micro cap, which comes with its own set of risks.
So the takeaway here is...
do more research. Look closely at their long-term strategy, their ability to keep making money, and how they manage their capital.
Okay, so here's a final thought for you.
Okay.
GTEC is bridging the gap between established industry in China and cutting-edge EVs in North America.
Right.
So how might a company like this capitalize on the global shift towards sustainable tech and the changing geopolitical landscape?
That's a great question.
It is something to think about.
It really is.
So if you found this deep dive into GTEC helpful, be sure to subscribe to the Stock Analytics AI YouTube channel.
Yes.
We do more in-depth analysis like this.
We do.
You can find links to some of the research we discuss in the description below.
And remember, our analysis is based on publicly available research and the use of AI.
And any stock suggestions in the comments are not financial advice.
Definitely not.
Always do your own thorough research before making any investment decisions.
Absolutely.
Thanks for joining us on this deep dive into Greenland technologies.
It's been a pleasure.
We hope this gave you a good overview of the company.
Yeah.
Based on the research we've shared, keep that final thought in mind about GTEC's potential in this rapidly changing world.
A lot to think about.
Yeah. Remember to do your own research and think critically.
Always.
And of course, subscribe to the Stock Analytics AI YouTube channel
for more deep dives.
Exactly. We'll see you next time.